Big Talk Podcast, episode number 2. I am Alex Vayner.
And Yoeli doubled.
As we see, we are sitting here in a new and improved studio with now 3 cameras. We got number 1, number 2, and number 3. Okay.
Hi, Mom. I'm on TV.
Due to an incredible popularity to our podcast last week.
Episode 1.
We got like 46 subscribers, so we're in a roll here. Today is a very exciting day because we're going to discuss 20 or so common myths about Bitcoin.
And questions.
Bitcoins and questions.
Myths and questions.
Bitcoin, questions, myths, and more questions. We had some questions, people that reached out to us after last week's episode. A lot of curiosity, so I'm excited to address those. However, today we're going to be following a structure that I found from a very famous...
a Bitcoin YouTuber.
Yeah. Forgot the word.
I remember him from the days when he was called Trader University.
Oh, that was 2 years ago?
No, well, he switched the name recently, but he had his aha moment.
For our listeners, his name is Matthew Kratter. We're going to link his channel in the description. He's probably the biggest education source for us in terms of understanding what Bitcoin is and what last week's episode and this week's are going to be about. I built out the questions that we're going to be discussing today, the myths based on his book. So just quoting you that it's a very, very good resource. And so let's just dive right in.
All right.
I'm going to tell you a story.
Yeah, the monkey story, right?
How did you know? Once upon a time, there was a man that showed up at the village. And in the village, he announced that he's going to pay $10 for each monkey that the villagers will give him. He'll buy monkeys $10 each. The villagers got all excited because there were so many monkeys in the village and started catching them and selling them. That went on for some time. And then he came back and he realized the villagers weren't incentivized enough. The supply of monkeys started running short. They've been selling them so much. And he said, you know what, we're going to up the price. From now on, it's going to be $25 per monkey. That obviously injected a whole lot of new enthusiasm. And the villagers started catching all the monkeys, running around. And, the supply went down even further. There were barely any monkeys left. And he came back and he said, okay, thank you very much. At this point, I'm going to make you one more offer. I'm going to pay you $50 each per monkey. But I have to attend some business out of town. So if you don't mind, my assistant here is gonna be collecting and storing them in that big cage over there. So he went about his business. As soon as he left, the assistant told him, look, I know there's barely any monkeys left here. Here's what I'm going to offer you. I'm going to sell you from this. He doesn't know how many we have. I'm going to sell you some of these monkeys for $35. And when he comes back, you'll sell them for $50. And now you're going to cash out.
So you're going to recycle the same monkeys?
Of course.
Okay.
So the villagers obviously got so excited. And, they collected all of their savings, whatever they had. And they went for it. And they sold as many monkeys as they could, they
they sold their homes to buy monkeys.
Exactly.
And borrowed money.
They did all they could.
Because they knew it's a short thing, right?
It was too good of a deal to miss.
They just have to put down $35 per monkey to give it to the assistant. Okay, go on.
And they're going to get $50 back.
And then when the owner comes back...
And the owner comes back...
They'll have a $15 profit per monkey. I'm just trying to get this straight.
Very good. That's like 30-something percent margin.
And it's locked in because he promised him the price. He's always delivered in the past.
Right.
I'm just getting it. Okay, this is amazing. So now, if he just comes back, who gets wealthy? Kind of everybody does, besides for the owner, who now is going to be paying $50 per monkey. I got it. Okay.
Right. Okay. However, there's one plot twist. The owner and the assistant just never showed up, and that in itself is the definition of a market bubble, or known as economic bubble or financial bubble. That's the lesson of this story. So one of the myths is that Bitcoin is a bubble. We're going to address that one. We're going to address another few I'm just going to throw out right now so you guys could get excited. And then we're going to start knocking them out one by one. Is Bitcoin bad for the environment? Is Bitcoin just for criminals and money launderers? Can Bitcoin be replaced by a better version or a competitor? Bitcoin is too volatile to be a good store of value. And so on and so forth. So let's tackle the monkey. Let's find out, is Bitcoin a bubble, Yoeli? What do you think?
Is Bitcoin a bubble? So, of course, in order to answer that, we need to define what is a bubble. Now, first of all, that story, I've heard that story in so many different versions going back since I was a kid. It was originally said about the stock market, about how, and it addresses the whole concept of insider trading, cronyism, and all pump and dump schemes, because that's really what they are. If you break down this story here, if you figure out what's wrong with the story, is a lot, a lot of what went on in Wall Street over the many scandals over the years. But the words you keep hearing when you listen to Charlie Munger and Warren Buffett and Dave Ramsey, and they talk about the value of Bitcoin is only how much the person who you're offloading it to or selling it to is willing to pay you for it. So that it only has as much value as the next person is willing to buy it from you,
Right.
which is technically correct. And that's why they call it a bubble. Because if you're buying something just to be able to unload it on somebody else and make a profit, and there's no intrinsic value, what they call, which is, we'll have to tackle that as one of the questions. What does intrinsic value mean? Like, what's the intrinsic value of a cup of water when you're in your house or when you're in the desert are not the same intrinsic value. But that is the definition of a pump and dump. And that could be a bubble that must pop. If something keeps going up, what is a bubble? A bubble is something that's artificially inflated and there's nobody containing it because everyone's getting all excited. Eventually, it reaches its point and then it bursts. And we can go into details of how that happened, whether it was the tulip, whether it was the dot-com bubble in 2000, the certain housing bubbles, the most recent in 2007 and 2008 when it collapsed. But the key that is going to be to probably half the questions that are going to come up, even if you keep it to 20. I have a feeling it's more like 30 or 40 questions. The key is going to be that Bitcoin is not something people want to sell. It's something they want to hold and spend.
Right. This is going to come up a lot.
Yeah.
I think there's other places where this might even be more applicable here. I would say, one of the indicators that something is not a bubble is the fact that it actually comes back, like the tulips you mentioned or
Correct.
other things. They popped and they exploded. Bitcoin, due to its volatility and its early development, we're still very early, had a few of these times where, it went up in 2021 a lot, then it went down, 70, 80%.
Yeah.
And now it surpassed that again. So this would never happen in a bubble environment, as we could just reflect on
Oh, wait.
this.
You can answer, there's many indications that it's not a bubble. It's not behaving like a bubble. I just want to just get to the bottom of what is a bubble.
Sure.
And what is Bitcoin.
And one more thing also is that the people actually had in the past referred to Apple and Amazon as a bubble because there's a natural perception if something is growing so fast and you don't have a full understanding of it, your first instinct to say,
100%.
oh, this thing is just like, this is like not normal. I'm the only wise one here that really sees outside of this. It's growing so fast for an unknown reason. It must be that there's something shady going on. It's not fair. It's going to pop. Something's built on a wrong premise here.
Right.
And the reality is, in today's world, there are very successful companies, and then there is a very successul currency. I don't know if currency is the right word.
They're stocks.
Yeah,
they're called securities. Now, the reason why they're not bubbles are because they didn't pop. They corrected themselves. There's an important difference between something having a correction.
Right.
If there's a big craze in the marketplace and a stock is overvalued, people start short selling, and eventually people take profits. And there's something called a steep correction, where something can have a 70% drawdown because people made their profits and now they don't believe that it's something they want to hold on to forever. So there is a frenzy of excitement that can cause a specific entity, a commodity, a stock, to behave like a bubble, even when it's not a bubble. But every Bitcoiner that I have met, and every Bitcoiner, which are not that many, in the scale of things, but every Bitcoiner that I have heard from online, and those are numerous, not a single one is planning to ever sell his Bitcoin. So when people say, so why are you acquiring it? Just to hoard it? So there's an important difference between selling and spending.
Right.
So if somebody put a gun to my head, you're going to like this one.
By the way, for those that don't know, my friend Yoeli here, his analogies and parables are sometimes so unnecessarily dramatic.
As I was saying, if somebody put a gun to my head and say, I will give you 6 days of uninterrupted speaking to explain to me what Bitcoin is and why it will succeed, but you cannot mention gold or make any reference to gold.
Right.
I would say, tell my wife and kids that I love them. Oh, and my parents too. All right, because you can't make the case. There's no way a sane, rational individual can fully jump on board a monetary system without having the 5,000 year of recorded history track record of gold.
Okay.
Try to think about how you would how do you describe something?
I have a way that I would describe Bitcoin that's not without using the word gold.
So you could save my life. What are you just sitting there for?
Exactly. So,
all right, go.
I'll tell you what I think it is.
Yeah.
I think an analogy that I've heard before and makes sense to me is the New York City real estate. A lot of times, people that buy New York City real estate, it's like it's similar in which ways. People often say there's never the right time to buy in real estate for New York real estate is now. Like the demand is crazy high. Right. People don't sell it; they borrow against it, and then they pass it on to their kids. In that respect, I think there is a similarity. So your dramatic analogy, I feel like maybe was a little unnecessary because you could have survived. You could have thought of it in the next 6 days.
So I disagree with you because real estate is something of value that has utility, and
not to the people that own it. They don't live in it.
Right, but you can't. No commoner views real estate as money. Meaning, when a person says,
it's an asset.
"I will spend my gold in small amounts when I need to," when I want to give a gold coin when my grandchild gets married to help with the wedding festivities. When it comes to real estate, it just doesn't follow. If you follow the whole banking system of how the notes...
Gold is definitely more similar. I'm just saying that the mentality with which people approach Bitcoin and the mentality with which they might approach New York real estate as something that you never sell. You just buy as much of it as not going anywhere. It's only going to go up in value. You could borrow against it. There's so many that it's just a very valuable asset. Yeah, it's not as you can't use it the same way that you could use Bitcoin or even gold. Gold also is more limited than Bitcoin. If we're going to go there. But
I think you're confusing being able to explain to somebody that Bitcoin has some value, but to be able to actually explain what it is and how it functions, you can't do it without using gold because think about how the gold monetary system, how it always conquered other ones. Real estate doesn't have a track record throughout history of what they used to denominate. Nobody said, if you asked somebody how much was a loaf of bread, 100 years ago, they knew 600,000, it's going up, of an ounce of gold that was to a loaf of bread.
Yeah, I was just trying to save your life.
I appreciate it. No, but in all words, drama aside, if the most important question that's going to be definitely one of your 20 questions, and that is what is Bitcoin backed by? You need to be able to answer, what is gold backed by? Because if somebody says, well, what backs my building? Well, it's a building. A building doesn't need to be backed by anything. But the question is, what is Bitcoin backed by? You need to say, what was gold backed by?
Very good.
And the minute they understand that gold was a social consensus for economic purposes, that everyone agreed, there's this unwritten contract among humans that when we trade, we are going to try to always find the most efficient item to use to trade.
As an exchange, right.
As liquid good.
Right.
So definitely not cheese if there's no refrigeration because it spoils. And whenever it might be good, as long as there's something else in that ecosystem that's better, everybody will naturally gravitate towards that. And if any group ever decides to use a form of money that has a stronger form in its ecosystem, in its area, they will be punished by somebody coming along and amassing a lot of that scarcer material and eventually devaluing the other. And it's happened again and again over history. So if you just study the history of gold, we're talking about a full 5,000 years of history, how it's upheld its value, you will understand what it means. Why when Michael Saylor says that I'm putting all my money into Bitcoin because I want it to be for my great-great-grandchildren because it will be around in 100 years.
Right.
So obviously there'll be another question that's asked, is that if gold was around for 5,000 years, then you see Bitcoin now is upending gold. So who's to say that something won't upend Bitcoin?
Well, we don't know.
And the answer is gold lasted 5,000 years.
Right.
And so did the horse, being the best mechanism for getting someplace fast.
Right.
There was nothing better than a horse for a full 5,000 years of recorded history. And then it took 1 decade of the automobile being perfected with internal combustible engines and a conveyor belt assembly line to make it affordable and cheap. And 5,000 years of the best mode of transportation, namely the horse, Bitcoin completely put out of business, never to return again.
Well, I'm kind of like to play devil's advocate here, but the acceleration with which the technology or things have been improving it's just insane. So whatever was 5,000 years had a good run for the last 5,000 years,
right,
could be replaced in the last 100 years, could be replaced with something that was like in the last 5 years, and it's kind of that whole thing is like, I don't know, logarithmic is the right, it's exponential. So in many ways, today one could say maybe there's a better version of Bitcoin that could come about, but given the challenge of introducing it to the market, that's going to be the only reason. That's going to be a separate
question. We'll deal with that.
Okay, let's move on to other myths and questions because.
But I think we should linger on this a little bit longer because this really is a lot of our viewers. We're still not satisfied with what is it and how does it work. So
let's hear. Okay.
The short answer is, it is a better form of gold. I've heard many people do the thought exercise. What would happen if Elon Musk would somehow capture this gold asterisk from outer space that would somehow create some, I don't know,
enormous supply.
some black hole and create an enormous supply of gold. Exactly.
Right.
So everyone's in agreement that gold would crash in value completely. It would just become utility used for electronics and for jewelry, which you have regular competition of supply and demand.
Because 90% of it is used for as a store of value,
right,
as like people's belief in a way, like people's.
It was money.
Right.
Gold was what the dollar was backed by gold. The gold was backed by nothing. It was gold.
Yeah.
But then people would switch over. So we'd have to find the form of money. Let's say Bitcoin didn't exist yet. They would switch to platinum. So find something which is not as simple to use as gold.
Yeah, but Yoeli, how long would it take for people to regain, I don't know if belief is the right word, but regain that trust that platinum is the new store of value? There's no way.
People have no choice. They're always going to look for the best. No, now we know why Bitcoin will win.
So gold is no longer good. I don't think they're going to switch to platinum. They're going to switch to Bitcoin. But
I'm saying
hypothetically,
but
let's say Bitcoin didn't. Yeah, if Bitcoin didn't exist, they would switch to something else. But that process is so hard to coordinate because how did gold's value start? My understanding is that gold's value was in its actual utility, which is producing things and its scarcity.
That's the mistake. Only
scarcity. Okay.
The reason how we know this is because if you track whatever recorded history we have of all monies, we really have to make a reference to the book. The name escapes me. There's a very good book written about the history of money, and it will take you through all these. We're talking China, the Far East, certain island nations. I'm jumping back to the United States when the Americans, when the British, Christopher Columbus, the Spanish and the British, when we got here, the Native Americans were using beads. And it was called wampum.
They had gold?
No, they were just using wampum. They were using every civilization will use the thing that is most scarce.
Okay.
So the British and the Spanish and the French, everyone brought shiploads of those beads. And that's why we learned in fifth grade in history, in the United States at least. Alex here grew up in the Soviet Union. We were taught that Manhattan was bought with $24 worth of trinkets.
Yeah, I haven't heard. I had to study for my exam,
because
I learned these things.
They were able to replicate glass. They were able to make out of glass and crystals with those beads in large amounts for very cheap, and just destroy and literally overtake the economy of the entire Native American economy of all tribes, because they were all using different forms of beads. Now, if there were many island nations that used, they weren't nations then, they were just islands, where, again, money's not created by government. Money is created by people who need to trade with each other.
Right. It's like mutually agreed.
And they use seashells. It was always different kinds of seashells. And if you go in Africa and parts of India, there were sheep, there were chickens, they were feathers.
You're nailing the scarcity point, and I get that.
That was the whole value, because that is the number one mistake that I get when people pull me aside on the street and say, "What are you doing? You're trying to make people lose their money and invest in Bitcoin." I say, "Whoa! I'm not trying to make anybody do anything."
I'm not talking about modern days. I'm talking about just looking throughout history in the global sense. Gold does have some very unique properties that maybe out of all scarce things that became, there's things that are scarcer than gold probably.
Yeah, no,
diamonds.
Gold should be like 100. No, diamonds are not scarce. That's artificially scarce. There's a whole system that it has to come through. It can't be blood diamonds. That's another topic. It should be on one of the questions. But it's artificial scarcity created by governments. because you can't use blood diamonds.
Gold scarcity is also
Gold should be $100 an ounce.
okay.
That is
Today, yeah.
That's what it should be because it's
But
only
back in
utility.
the days, people made teeth out of gold. I mean, some people still do. But because it doesn't corrode, there's a lot of, in technology, there's a lot of application. That's all still a tiny fraction of what gold is today, or how much gold
But
we have.
there are millions of ounces of gold in the world, and if the majority of those millions of ounces were not stored in vaults, then the marketplace would have to adjust of using gold for jewelry, for plating, plating nice stuff. It would be very cheap. You can buy a gold-plated chair for a reasonable price because gold will come down to its utility price.
That might actually happen in the next 20
Just
years.
by the way, that's what happened to silver.
Right.
Silver today trades, if I'm not mistaken, if you want to search, if you have the browser here, the silver to gold ratio today is closer to 100 to 1, if I'm not mistaken, or 70 to 1.
It's between 85 and 89.
What, an ounce?
Gold silver ratio?
Yeah, it's 1 to 89?
I think the ratio is per, I'll tell you right now.
You can just look at the price of silver per ounce and the price of gold per ounce and do it on a calculator. But
Okay.
all right, but that ratio has been going down over the last 100 years. At one point it was 1 to 3. Then it stayed at 1 to 7 for many years, but now silver basically is
way less valuable.
Is for Haimish Orthodox Jews to have the menorahs
and Shabbos candles
and Kiddush cups and Shabbos candles. Right? There are some cultures that still use silver. There's some low-end jewelry, and that silver went through that journey, and gold would go through that same journey. And by the way, it will. As Bitcoin eats market share of gold, because we see Bitcoin's already eating market share of stocks, bonds, treasuries for sure, or real estate.
Yeah.
All the money flowing into the ETFs now, those 11 approved ETFs, which stands for exchange traded funds that are on Wall Street, which were all in the beginning of January approved by the SEC.
Yeah.
So now, I think it's FCC at that point. I forgot who's in charge of what.
Quick point here also.
So that money would have gone into real estate.
Right.
And bonds and treasury notes and bonds and some stocks. And they're all in Bitcoin. Anyway, go on. Sorry.
There's some very good news that are coming out right now, actually, for people that do own Bitcoin, and that is the fact that, as people saw, Bitcoin had pretty much doubled in the last couple of months, and that was caused by it becoming available through those ETFs to the long-term investors
on Wall Street.
And now very similar things are happening in the rest of the world, where you have on May 28th
it's England's, right?
Right.
Yeah.
UK approved it as well. I think they have a system where it's going to be available to some elite group first and then to the general public. But basically, all the big investors there as well are going to have access to Bitcoin in a way that they're more familiar with and the way that they're comfortable with, as we know. And we're going to discuss this as well. The way that Bitcoin is stored could vary. You could rely on a custody of an exchange like Coinbase, or you could store it yourself, which is recommended once you're a little more advanced. But that opens a huge inflow, so Bitcoin is predicted to go up because of that as well. Plus, you have Hong Kong coming up as well, and some people actually say it might even be bigger than the U.S.
Oh wow!
So a lot of exciting things happening in the summer.
There's a lot of non-regulated money that made its way to Hong Kong and investments that might be available to be moved into Bitcoin. But realize, we're going to have to touch upon that when you get to your question about volatility.
Yeah.
Institutional holders are not real hodlers. They don't fully understand Bitcoin.
Right, they want to sell.
They just want to make a profit.
But it's making money right now. So
right. So there will always be volatility, meaning the volatility will only stop in Bitcoin. So whoever is getting into Bitcoin at any point in the next 10 years will have to endure the volatile ride and have the stomach to, let's say, in a few years from now, it's at 200 and people buy in at 200. It's going to drop to 150 before going to 300 and then dropping to 180 again.
Right.
And people have to be able to discipline themselves that do not put in money if you don't understand that you cannot have access to this in the next few years because we don't know where it's going.
Right.
The hodlers, which are...
Explain what the hodlers are.
Hodler stands for hold on for dear life. HODL.
Yeah.
Hodlers are people that believe in Bitcoin, that believe that they want to transfer, they want to exit the fiat money printing strategy. They do not want to be forced to buy stocks and bonds and real estate. They don't want to be busy flying around the country, managing their real estate or dealing with
they want to also feel like...
They just want to be able to store their money in a way where it is good money. And they believe that Bitcoin is that good money, the equivalent of gold. So we can even interchange the word Bitcoin with gold. Let's call it digital gold.
Right.
They're holding on to their gold, and they want to store their money in gold.
Plus, I think that a lot of people also, the hodlers, that community, they view it also that because dollar is a melting ice cube, just like all fiat. Some are worse, but it's
forget dollar. Most hodlers are not in the United States.
Oh, is that right?
Yeah.
I didn't know. So I think part of it is also the fact that they realize that there may be financial collapses all over the world. In the U.S., if you look at the debt, that we're just exponentially increasing. I think people just want to have like a safety kind of cushion where if something happens in the world, your bank account, your money is in the bank, you're fully dependent on every system you're a part of. I don't want to sound like a conspiracy theorist, but your money in the bank, if Chase decides to freeze your account or put it on hold, there's literally nothing you can do. You're going to call, and the representative in the Philippines is going to pick up the phone, and they're going to say there's nothing we could do right now. You're going to have to wait. And there's literally nothing. I've been in other cases, not a financial collapse, but I faced these situations many times. So
you know what I've been through the last 2 months trying to get the funds of a
right. It's not for a podcast.
I helped sell an apartment for a family member, and we've been trying to get those funds already. It's 2 months, and they're just making us jump through hoops just to a very civilized. You know
what feels really good?
Just getting that money wired out of that country has been one document after another, and it's still not here. It's 2 months, and not a dollar or whatever currency is denominated and has come over across the ocean. I keep saying, if only that country was more Bitcoin lenient, because that country is one of the strictest in the world. Let me just say what it is. It's Israel, okay? Israel has this issue with Bitcoin because they're worried about people using it to finance terrorism.
Justifiably,
right? I'm not sure if they're right because it's the easiest thing to track. If the people in the upper echelons of government understood Bitcoin, they realize they wish the terrorists used Bitcoin, which they never would, because you can always track addresses, and they can never get away from you. Any address associated with that address can be traced.
Here's a myth, by the way. People think that, I don't know if...
We'll get to, that it's used for criminals. I'm just getting back to this point. So Israel, and I was saying like, wow, how amazing would it have been if Bitcoin was a Bitcoin easy country? I would tell
100%.
They would just buy the Bitcoin there. 10 minutes later, it's here in my wallet.
It's I think, Yoeli, we've been so conditioned. We've been so conditioned to using
the banking system.
The banking system that, and we're literally like held in a chokehold the whole time. I just think of it like if you have like a tenth of a Bitcoin that you want to send to a friend or whatever it is. Or if you ever send Bitcoin from one address to another, which is not so complicated, it doesn't have to be a lot, any amount. It's so liberating just to know that you own it, it's yours, and now you moved it from one place and gave it to another person. There's something, it's like kind of like even cash is controlled by the government. This just feels like you're a part of something that like it's actually yours and you don't have to ask anyone's permission. You made it an agreement and you can move it from one place to the next. It's very unique. Like you never really have that experience. If I handed you a block of gold, I think that would be the same thing. but we never have that.
How can I send that block of gold across the world?
You can't. Okay, so that's true. But I'm saying in terms of the feeling one has, it's like you give someone a big gift or something. You give someone a block of gold, you would experience the same emotions I do when I send a portion of a Bitcoin to someone. Because it's mine and I can do whatever I want with it. I don't have to ask Chase permission and get a hold or wait till it's put a pending status that you get on the account, and then it's like, and then it has to clear, and over the weekend it doesn't do anything, and then they have verification and they send you text messages to say did you mean to send this transaction or not? I understand that all of this comes to protect us, or at least a big portion of it is justified as that.
Right.
But a lot of times I actually had a real situation with Chase. I'm going to share real quick, where I was even thinking of maybe
suing them, right?
Because I had a large check that someone sent me, and I put it in my account, and it's a story. I hope you guys don't mind. And it said it's going to clear in 11 days, which I think is common in the way they work.
11 business days, which is like
11 business, exactly. So I went to the branch and I said, look, I have my cash flow situation. I need this money sooner. The guy said, yeah, it shouldn't be a problem because I'm seeing already the bank released it on the other end, and you should get it tomorrow. If not, just call them tomorrow and they'll clear it. They'll push it in. And I was like, it doesn't happen automatically. Like, it's my money. Like, why are they? Yeah. He said, I don't know, it's just how the protocol works. So in my mind, first problem already this: if it's my money and someone sent it to me and their bank cleared it, so it's not whatever. It's already coming in. What do they have to verify? And if they're still verifying, whatever that is, like it's coming in. Like, what do they have to lose? What's the worst thing that's going to happen? It's money coming in. It's not money leaving. Now, next day I call, and I call the representative, picks up overseas. They have a pretty good English, so you don't actually know they're overseas, but I know they are. And I quote the bank person that I spoke with, and they said it should clear, and they said no, it's like more verifications. You're gonna have to call again later. I call the next day, same story. They say on my end it really looks it's just gonna clear on that date when they said it, like 11 days later. So and the guy in the bank told me, he said, look, if it clears sooner, there's no like they shouldn't hold it. And I was like, okay, but why are they? That happened to me, and then it happened to me again.
Yeah.
And then it happened to my friends.
It happened to me too, by the way.
It happens to everyone. So I understand that they could always justify saying, we're doing a security check. But why is it always on the very last day? I have an answer. It has nothing to do with the security.
They use the money.
Of course. And I made a calculation. If you have, let's say, out of all business days, I think there's 270 something days in a year that are business days, and you're able to hold it for 11 out of those, so that's 270, right?
Oh, you're going to start doing the math, how much money they make?
So they hold, for 4% of the year, they held that one check, right? People sometimes have checks coming in all the time. And if you calculate the scale at which they operate, and you realize that there are literally hundreds of millions of dollars made just from investing the money that's being on hold.
Yeah.
Okay, so I mean,
can prove it, by the way. I have a proof.
I was about to say I don't have a proof.
I do.
But if you do, please do.
I happened to me this month. I have a Valley National account, which I have a line of credit against my life insurance policies, my whole life policies.
Yeah.
We should make a video about that as well. How you can buy life insurance young, a whole life policy, which is like a long-term mutual fund, and keep it for life, and if you need the money, you just borrow against it while paying interest. So it used to be easy because when I started borrowing against it, I was paying a total of 2.75% annualized. So if I needed money for a deal, $100,000 just to put into a property or something, I just borrowed at 2.75% interest for myself. It's money that I put aside for my old age. That's what a whole life policy is. But in any case, so I transferred on my Valley app from my line of credit to my regular checking account, and I waited until it completely cleared, and then I wrote myself a check to my Chase account, because from there I wanted to give myself a business loan, which I could just transfer to my, just for accounting reasons, to my other Chase business account. And I did. And guess what? They put a 10-day hold on my own check. A day later, my own check that I wrote myself.
That it left your account.
Left my account. The next day, it was gone. And then in my incoming account, it says this funds will be available on this and this date.
But it's already available. The Chase is holding it.
Right. I'm telling you that it was my money that I sent from Valley that is secured, meaning, and I spoke to Valley, and they said there's nothing we can do. On our end, we released it.
So now Chase is basically using bureaucracy and lying to you, essentially.
They held my money for 9 days, 9 extra days. So, again, listen, credit them. That's their system. But
I know, but there's a reason why they do it.
But credit us for exiting the system.
Okay, fine. So this is the Bitcoin frustrations that we experience. By the way,
we're programmed to ask permission. When I want to send you a house in another country, I need permission from a bank to send it to you.
Right.
Bitcoin allows me to send it to you directly with nobody else involved.
So Zelle is a pretty easy system in that usually it's for smaller amounts. So Chase is a lot. They've put in the algorithms in place where they don't have to freeze things, even though I've had things happen like that before. Zelle is quick pay, whatever you call it. But with Bitcoin, I think the risks are if people actually make some human error, then they might lose their money completely or never be able to retrieve or send it to the wrong wallet or whatever. So, okay, now that we touched a few subjects here, just a quick point to our listeners, please do subscribe to our channel, so we could continue producing this good content and break out of the 46 followers and maybe get even 47 or 48 would be amazing.
Okay, let's jump into the myths.
Okay, let's jump into the myths.
And they're going to intertwine with each other. Many answers will be repetitive. We'll try to move as fast as we can.
Amazing. You know what? Here's what I'm going to do. I'm not going to time things, but I will be just throwing stuff at you.
All right.
And if it's taking, if we're getting on a tangent, I'm going to address it.
I would speak fast, but last time people complained that they were watching me on 1.5 and it was too fast because I was speaking too fast.
So they could put 1.25.
All right.
Maybe we could change it in editing. Okay, so Bitcoin uses too much energy and is bad for the environment. I've heard that one many times.
Okay. So let's do this fast. Any stuff that's available that you can watch, very, very clear, good videos out there that debunk a myth. We shouldn't spend too much time on them.
That's true.
Something like that. the case is being made that Bitcoin is saving the environment. Literally the opposite. I know that people don't like the word literally, but here it is literally the opposite. So what would I say? Really the opposite? It's the exact opposite.
Okay.
Bitcoin right now is using what they call a lot of stranded energy that would get lost anyway, off-peak hours. If I'm not mistaken, close to 70% of Bitcoin right now is being mined from renewable energy, where people set up infrastructure. We know El Salvador set it up over the volcano, like we mentioned. Many waterfalls and very windy areas.
Right.
All are getting infrastructure, and we're talking about places that are hundreds of miles from any grid. So it would be very expensive to run wires to connect that to any grid.
Right.
But because you have a satellite internet connection there, so all that energy is being used from some, let's say, waterfall near Victoria Falls in Africa, and that's going. The Bitcoin network around the world is benefiting from those miners. So it's almost like you're wirelessly using the energy, something that previously
Because it could be anywhere, right?
Right. So there's a certain amount of energy that has to be used for mining, because it's a lot of competition and it's a very competitive space. And anybody who's using expensive electricity, like if you decide to mine in your neighborhood, you're going to be priced out of the market because the miners who are competing against you, they have some heavy infrastructure, one-time investment fees and maintenance, but they're essentially getting energy for either free or very cheap. Then there's people that buy packages of deals of off-peak. You can't shut down a grid. You can't shut down a generator. And the problem that all grids have
is that they have too much energy. They don't know where to put it.
That they can only store a fraction of it.
Right.
So off-peak, even when they slow down the systems at night, there's a certain amount of lost energy. These mining rigs, they have deals and they turn on their machines then. And that's exactly it. There is no other way. It's a free market. And if you're using the energy that would be used for people that need it to power their homes, you'd be priced out of the market and you wouldn't be able to function. So all those people that are saying like, oh, the Bitcoin mining can power a small country, it's like there's so many things wrong with that statement. It's so misleading.
Right.
Now, there's another argument that's being made, that is just a general argument. Let's say all this was not relevant and Bitcoin did use a lot of energy. It's worth it.
Well, because you compare it to the amount. Do you know how much energy the banking system uses?
The internet is 10% of the global energy uses the internet. Life, an advanced civilization uses energy. And something like this to protect civilization, and there's no greater protection from tyranny than a person having access to his own value and his own money. And
it's not on the list, but you're tying into something very important. I think that there's a misconception that people have that they think that Bitcoin is quote unquote for the rich. I think that it's like an elitist thing. Like you could buy people that bought in either in the right time or they have a lot of money that they could put into it. They're going to be the ones that are going to benefit when the price and the value keeps going up. And the reality is not like that because of what you look at the actual demographics and what's been happening in the world in El Salvador.
In absolute numbers, so in percentage of Bitcoin, the percentage of Bitcoin being held is being held dominantly by the wealthy. But in absolute numbers of bodies and people holding Bitcoin, it's overwhelmingly the supremely poor people.
Right.
And we know how...
From poor countries, right.
So now if we know that and these were people that had no choice but to learn, whether it was in Lebanon, whether it was in Nigeria, Egypt, Argentina, Venezuela, whoever was able to get their hands on Bitcoin did. And obviously, if you think about how scarce Bitcoin is, only 21 million units will ever exist,
right.
And there's like 15 million available now. And the amount being traded on the open market is closer to like between 1 and 2 million because everything else is being held by long-term holders. If everyone wanted Bitcoin, and as we get to that adoption rate, it will go up in value just by the non-rich holding onto it. And the rich will sell it off to turn a profit.
That's right. Just like what we talked about at the ETFs, right? The BlackRock and people that are putting in right now. They want to cash out in 5 years. And they want to say, oh, you know what? It went up 5 times in value or 10 times. And it was a very good investment. And that's what they...
So let's jump to your volatility question now because it's connected directly to the volatility of how it's held by the rich and the speculators. And people will understand the path, the 20-year path to Bitcoin's like complete decentralized adoption and a stable store of value that will constantly go up, but gradually. Okay? So what's the question? The question is, if it's so volatile, how can it be used as a store of value, right? That's one of the questions.
Yeah,
okay.
That's good, precisely right.
So the answer is, it's a process. And now, I haven't found anybody that agrees with me, but I'll say my opinion on something. I believe if Bitcoin came out in 2009, it made headlines a few times already in 2000 by the first halving event when it reached $1,000. After the first halving event, when the supply went from 50 to 25, and that's when all the other coins, people started, at least toying with the idea of competing with Bitcoin. My opinion is, if Ethereum was launched in 2014, and then it was just all downhill from there of all the coins, the amount of coins that have been introduced since then, I mean, most of them didn't survive even more than a few months. They were all pump and dump schemes. But we're talking about well over 20,000 coins. And the amount that are in the exchanges today are somewhere around between 5,000 and 6,000. But there's always little ones coming and going, only in here, only in this region. The majority of them are just regular pump and dumps. People like the monkey story. People looking to get rich, hoping that they time it well, that they get in and out fast enough, and hope that the people at the bottom holding the bag, and as it goes to zero, that they don't cry too much, so to speak. That will be decent. It will be split up among enough people. That's how people rationalize. That if 1 million people take a $5 loss and I take a $5 million gain, I'm fine with that.
It's still stealing.
Right. Okay. It's unethical. But the point is, I can't speak to how, that was the clarity. That's why I never...
What's your unpopular opinion?
Well, I say that if those coins would have not come along and distracted the world and caused so much non-clarity about what Bitcoin is, I think Bitcoin right now would be fully adopted by half of the planet and would be at about $20 million per coin.
Don't you think that also did the opposite, where it kind of introduced the world more to I mean, the market cap of...
No, what you're saying now is what other people tell me, why everyone disagrees with me. They say, we needed the contrast. It was so distracting what they did, because Bitcoin came along and said, we can be money. And the cypherpunks and all the anarchists jumped right on it, and then the libertarians followed, and then the geeks and the cryptographers, but the cryptographers. By the time 2013 came around, it was trading for $1,000, give or take. And then the speculators started coming in, and then all the greedy people came in. And I remember those days. What they all said was, I didn't know the difference. I was really following along because I knew it was an opportunity to make money. And all I saw was, we are Bitcoin, just better.
Right.
So that distraction...
I mean, that's still the message for a lot of
that distraction, because I would have then gone down the rabbit hole that I did, 9 years later, gone down the rabbit hole and said, wait a minute, what is Bitcoin? What is money? What is gold?
Right.
What's digital gold?
Okay, I get it. You're from your own personal experience, you and then there's probably other people that had that. They diluted your understanding of what they made Bitcoin just like any other crypto. So it's that one's the first one. It's kind of less efficient.
Right.
These guys are better, but all of this is just a good opportunity to buy and sell and make some money.
So Glassnode, which is the tech company that's most famous one that reports all on-chain activity in every customizable possible way. It's a paid, you have to pay to use the software. I mean, they have some free stuff you can see, but if you go into Glassnode, you really want to use it, it's paid. So they're reporting for the last few weeks that there's every day at least 10,000 new wallets are being opened around the world. That's now a few months before the halving, it hit 70,000. Now we know that if that keeps going in 10 years from now, it's the way growth works. It's not gradual. At a certain point, it starts exploding. When the more people have clarity, the more they talk through with others. This 10,000 wallets a day would have happened more than 10 years ago. And the 100,000 wallets a day would have happened 5 years ago.
Right.
And the $1 million a day wallets a day would be now, where we're on the way to the entire world adopting it. That's my opinion.
Okay, and look, it's a very interesting thought. I don't know if I have had enough time to think about this. I think that there's definitely, it's valid in many ways.
Because I'm a pretty smart guy, and I couldn't get it.
Listen.
I couldn't get it. And I asked questions, and I asked the person who introduced me to it, who's a relative of mine, and I remember the question I asked, but who says that Bitcoin will win? Maybe all these other Hreft coins that are coming along are going to win. And he said, yeah, we don't know. And he didn't say, no, you don't get it. Bitcoin's...
Well, that's because he probably didn't get it either.
I mean, today he claims he did then. He just didn't explain it to me. He should have just said, no, Bitcoin's money. Those are these interesting people who want to get rich to create a technology and create pump and dump schemes. And he didn't explain that. And then I would have dove in and seen the what I've seen a few years ago when I had my aha moment. You know what was the catalyst to my aha moment? I believe it was the Lex Friedman interview not with Michael Saylor, not with Breedlove. I mean, I watched those all afterwards. With Safety and Amos, the one who wrote the Bitcoin Standard, the best-selling book, and laid it, which he put out for free, and then the Fiat Standard, and that when if I'd rewatch it again, I would tell you the moment where like everything rearranged itself, and then suddenly I got everything I've been hearing, and then suddenly like everything fell into place, and that is that Bitcoin is a consensus. A consensus means that if people want something, a Picasso has a lot of value. A very small amount of people are interested in it. A very small amount of people are interested in it. Once it hits like the lower market, in the thousands, you don't even have much of a market for it. It's only in the millions. But gold had this consensus. And you didn't need it to be backed by anything. Again, like I said, gold, the word gold is going to be mentioned a lot because it always will parallel itself to understanding Bitcoin. Yeah, go on.
Okay. We still have to tackle some questions, so let me throw some more stuff at you. Okay. Bitcoin is a Ponzi scheme or scam.
Okay, it's not, but...
Okay, so that's the myth, okay? And the question is...
Okay, so we shouldn't spend too much time on the word Ponzi because a Ponzi scheme has to be run by somebody. So there's nobody running Bitcoin.
The ringleader.
No, and if somebody believes that all the millions of HODLers who have not moved their coins in the last 7 years, which is like, I believe, 49%. In the last 2 years, it's like, in the last year, it's 70%. In the last 2 years, it's 66%. All according to technology, data available from Glassnode. So they're really bad at their Ponzi job. Oh, like one day they're all going to dump their coins. Now, it does have bubble-like properties for speculators. That's why it's so volatile.
Correct.
But the poor villager in Argentina that's storing all his wealth, it's not Ponzi. He's planning to accumulate every possible Satoshi he can get his hands on so he can live and buy bread. And he wants to spend it.
Right.
And all the, medium Bitcoiners who are not super wealthy just want to hold all their wealth in Bitcoin. And some of them will sell one Bitcoin to do a real estate deal, but that's because they're spending it, not because they're dumping it on the marketplace. There's a very big difference. Whereas on a daily basis, the speculators are constantly dumping their money. I need to be able to talk about something called forced liquidations and leveraged sellers in order to understand the volatility. Okay,
please.
So let's do it as a step-by-step exercise. Okay, so there's something called margin trading. Now, the big boys use margin. Everything's margin. What does margin mean, and why would somebody use it? The answer is, why would they not use it? Okay, are you curious? Okay, margin means where if you're holding something worth $100, the person holding it for you is willing to lend you a certain amount of money because he's holding on to that $100 item. And that's called using margin. So let's say you believe in Amazon, right? And you buy... I don't know what Amazon's trading at nowadays, probably 20... they split. It's trading about $150 if I'm not mistaken. So you own 10 shares of Amazon, which is $1,500, and you want to buy more. So you believe that Amazon is going to beat the interest rate this year. Interest rate, even now at 8%, you think Amazon's going to do 30% year over year, so you don't care to pay that interest. So you then go into your broker, your financial institution, whoever's holding that, and ask for margin. On Robinhood, it's an application, done. Same thing with Schwab and Fidelity. You just enable your margins. They'll give it to you because they have your principal collateral. They want to make the interest, and it's not a risky loan for them. But it only gets risky that if they lend you, let's say, so for Amazon, they're able to lend you almost the same amount. So for $1,500, they're going to lend you $1,200. And you can then buy 8 more shares at $150 each. Now you're holding 10 plus 8, 18 shares. The whole value of this thing is $2,700, but really $1,500 is yours and $1,200 is borrowed. Why would you do that? Because let's say over 5 years it doubles. And then you can sell off you can make all those profits, give them back, pay their interest the whole way. And then, whatever. If the numbers work out, you made money. Obviously, people use margin hoping things are going to spike very, very fast, and then they can turn a profit and come in it. And people are always entering and exit, and that's called leverage. Leverage means that you're trading now, that you're levered with those 15 shares that you hold.
Sure.
So now what happens if the price of Amazon drops? So let's talk about a 20% drop. Amazon goes from $150 a share to $120 a share. Now they're only willing to lend you 80% of the current value. So they're only willing to lend you $900, but you have $1,200 borrowed. That's called a margin call. Where they call you, I mean, it's not a phone call anymore. You get the vibrating message on your phone that you have an account deficit or you're approaching margin call. There's a lot of warnings you have. And you have two options then. You can either insert more liquidity.
Just put in cash. So
put in more money.
So you have more cushion.
Put in more money. Or sell something. Because when you sell it, it goes back into your brokerage and now it's cash and you're borrowing less. So that's called, now if you don't have the cash, now obviously you probably don't have the cash because if you had cash, you would have put it in originally and you're margining on top of people are always are pushing their limits. So now, again, this is not a terrible practice because it's a risk you take and you'll have to sell off some assets. Sometimes you lose a little bit, sometimes you still have small gains because when they make you do that, you kept borrowing. As the asset goes up, you can further borrow.
Right.
So that's called a forced liquidation. Now we're not talking here about a short liquidation. That's a separate thing. I don't want to get into that. I mean, it's connected, but I want to just give you the most common. Before going into the short stuff with short sellers and how the risk that they take and how if they're on the wrong side of the bet, how that can drive the price in two different directions. Let's stay with this with this leverage. So now we have to do this step by step, just so you can get a feel. Because when you go through it, people have gone through this experience whether it's Bitcoin or just in the stock market. When there's something called a forced liquidation and then cascading liquidations. You wonder, you're like, okay, so we had a liquidation. Why the next day did it do another round? Then it goes up a little and comes even further. What is going on? So now you have to sell. Now you have to sell something. What are you going to sell? So everyone will always sell the riskiest assets. So this person's been holding on to. Sometimes there's taxes come into play. What you bought, do you want to harvest the loss? But you bought Apple and Amazon and Google and Facebook years ago. Let's say you bought the S&P. You're not selling those. So you start looking at this pharmaceutical stock that you were hoping would spike or some risky thing. So for the last few years, for the speculators and for Wall Street, Bitcoin was the riskiest asset. And that's the first thing you have to sell off. Like that's the biggest unknown. So now when there's some type of stock market crash, nothing to do with Bitcoin, and that's what happened in 2021 and then 2022, after it hit its highs, which is a separate story. It should have never gone to 69,000 the first time. That was all because of futures tradings, which was all Wall Street propping up a price. But that's another topic as well, and I don't think we have to go into that. Anybody interested in getting into so many videos made on these topics, but you have to be interested in this kind of financial language to even care. Let's try to focus on what Bitcoin is. But this is important to understand the volatility. So then suddenly everybody's forced to sell Bitcoin at the same time, which causes the price to crash. Which causes anything Bitcoin related, if you're leveraged, to crash even further. So now you have to sell even more. And that's called the cascading effect. Now add into the mix that people were borrowing, like there were these crypto exchanges that were lending out a crazy margin. Instead of giving you, like I told you the example, Amazon, they'll give you 80% of your value. They were giving you 800% of your value. They let you borrow it was not regulated. People were borrowing against one Bitcoin 5 different times the value of that one Bitcoin. So the forced liquidations, when things started crashing and the people needed those back, that creates a cascade, and suddenly all these assets have to be sold, and those assets themselves keep losing value, and therefore your original position now has been further lowered, and that's called the cascading liquidations. In a nutshell, anybody can further research. So volatility will always be there when speculators are getting liquidated.
The question is how much of Bitcoin today is owned by speculators versus
a lot.
Still?
Yes, that's a long road.
What about
that's why we're so early to Bitcoin.
Okay, so what about ETF? People that are buying through Fidelity and all that.
So if you're talking about the long term, traditional investors,
they're looking to sell. They're not looking to.
No, they tend to hold for longer. But there are so many day traders and so many people that have spread positions that are constantly moving in and out of the space. They're always chasing the next deal. They trigger a lot of activity, and many times once activity is triggered, it's a whole
cascade.
Right now, then there's a lot of liquidations that happen, like the short squeezes. Okay, we're not going to go into short selling right now. Okay, let's stay on Bitcoin.
Okay.
So I explained a little bit of volatility, but the real volatility will always be that hodlers want to hold Bitcoin forever. Speculators, the ones who trade crypto, now all the people who trade other coins, All of them.
Right.
Virtually all of them. Every single one of them holds Bitcoin as well. Why? They want to minimize their risk. So this person is chasing this coin or that coin or hoping XRP or this one's going to double Doge and all these new ones. Shiba, I don't know how you pronounce that. Shiba Inu. It has like 7 zeros and then a 1. And
Right.
that's the
Let me ask you,
Yeah.
in this context, because we have been mentioning gold a lot, would you say that what percentage, and I don't know if you have the answer to this, but I'm just thinking out loud, what percentage of gold is owned by speculators? It's probably, if any, like very, very small number,
Very
right?
little.
So very, very few people buy and sell gold to make money on the difference, which is why gold is such a secure asset
Right.
in the eyes of humanity.
Okay.
I'm saying that Bitcoin basically is going towards that. It's just going to take decades.
Well, we don't know. Like I told you my opinion that it would have happened already if all the other cryptos wouldn't have come along. It would have been very clear.
So it all depends on the education. The more people are learning
That's it.
about...
Well, 10,000 a day is not bad. 10,000 new wallets a day. We're not talking about 10,000 new Coinbase accounts. That number is much higher. It was millions over a few days that were downloaded.
Oh.
Coinbase at one point for a few days trended as the #1 downloaded app in the United States.
It also crashed.
Yeah, well, yeah, but everything was safe. I'm talking about new wallets, new real wallets being opened.
Right.
Whether hot or cold wallets. Hot means connected to the internet, cold means not connected to the internet. 10,000 a day is a respectable number. Yes, there is a conflict. There's a standoff right now that's been going on for the last, I'd say, 13 years. Not from day one, because it took a few years for it to take off. I'd say around 13 years it's going on. And that is a group that's treating it like gold, and another group that's treating it like Dogecoin and Shiba Inu and Ethereum and speculation.
Crypto bros.
Right. The crypto bros. That's the word.
But,
exactly.
But don't they more focus not on Bitcoin but other
Yeah,
assets?
but they all have Bitcoin in their portfolios to minimize
Also,
their risk.
Bitcoin controls the pricing for all other
Yes,
cryptos.
but they all hold Bitcoin in their portfolios to minimize their risks.
Right.
Because to them, it's the least risky asset. So that standoff takes time, and none of us know how long that will take.
Right.
What
From
we do know
what I've
is-
seen, it seems like those numbers are going down in terms of like people are buying in as a long-term investment.
Right. So for a Bitcoiner like that believes in Bitcoin,
Right.
and a person of modest means and a simple person, the best news is that Bitcoin has one of these big crashes and drawdowns. Like there's no better news for me than Bitcoin crashing down to 20,000 again for another year. It means I put in every single week for a year straight the same amount of dollars.
Well,
let's say I set aside $1,000 a week for Bitcoin.
Because you're a delayed gratification kind of guy, Yoeli.
No, I mean that. But
I'm saying a lot of people want money now, and they say like I want to buy
Not
as
hodlers.
much. No, one sec. Yeah, but I'm saying the mentality for a lot of people could be I want to buy as much Bitcoin as I could afford right now, and then I want it to go to the moon like the next day. So that way, all the value that I'm saying
but
you
90%
have a mentality of a long-term
not me.
investor.
90% of hodlers are all in on the concept of what they call DCA, dollar cost averaging,
Okay.
which, by the way, is not unique to Bitcoin.
I understand.
That model has been studied to death. These dollar cost averaging into an asset, into the S&P, into Amazon, into Google, into any stock that obviously that doesn't fail, has always been the best strategy, and you can't time it better. People aren't static. Nobody makes money and puts it into something. A person earns money all the
Okay.
time. People constantly are generating money that they need to put somewhere.
For our listeners, dollar cost average basically means to allocate a certain percentage of all of your income towards either S&P 500 or whatever.
To whatever asset it is.
And there are all these projection models. We could leave the link in the description of basically where you could put in the whole trajectory of Bitcoin. You could say if I was putting in $100 a week, $100 a month for the last 6 years, which would have ended up being, I don't know, like a couple $1,000. There's a calculation.
There's another calculator that does it for you. It tells you what it'd be worth today.
Exactly. And I did this actually the other day.
Yeah, it's
I said
hundreds of thousands.
if I put in $500 for the last 6 years a month on average, like every month, $500, a lot of people could afford.
Right.
It's for it could be a percentage of your income. And it's not going to change the quality of your life.
Right.
But in 6 years from now, your total invested...
Not from now, from then.
From then.
5 years from then.
So now, the total amount you would have invested in 6 years, let's say, would have been $36,000 or
Right.
5 years.
Whatever the number
whatever
is.
it is.
It's
But the value of Bitcoin, if you were to look at it from the dollar perspective, at this point would have been like $200,000 or $300,000.
Even more.
Yeah.
You would have put in, over 5 years, you would have put in 30,000.
I mean, that includes in 2021. And then,
6,500 a year is 6,000 times 5 years is 30,000.
Right.
If you would have, but it's important to understand that dollar cost average means you put in $500 every month. If you would have taken that same money and picked one day on the calendar in each of those 5 years and bought it, then you have a much greater chance of missing it. And you would have bought it in each year at a very bad time or very good time, and you'll get a completely different number.
Oh, you could get lucky also.
You could get lucky, but the odds of you getting lucky 5 times in a row.
From a non-mathematical perspective, I think this is more of just a human behavioral point. Like, if you want to build long-term wealth, or if you want to build long-term value for yourself, for your family, and your kids, and not drive yourself insane of how the market fluctuates, because it always does, you just have to be disciplined and pick a strategy. And the very basic, simple strategy is to put a percentage, just like what you're saying.
Right. Weekly is the best, gives you the best odds. You're constantly buying. You create this long, perfect curve.
Right.
Of constantly buying at a good price. And as it goes up, you're buying smaller amounts. It's very important. If a person says, I will buy 0.001 of a Bitcoin every week, that's not called dollar cost averaging.
Oh, no, of course. We're talking about the value.
Because
that
at a certain
have.
point, you're spending, when it goes up, you're spending so much money that week. You have to value the dollar cost averaging in your money that you're using, which is dollars, and say, I will buy $100 a week worth of Bitcoin. Then you're having a good dollar cost average.
Okay. Very good. Let's move on to more questions, because all of this is valuable. So I'm happy that we're going to these tangents, because they're not talking about our personal lives or stuff that doesn't matter. This is all for our listeners. Please hit the subscribe button if you haven't done so yet.
And like. Please like me. Please like us. Yeah, go on.
Yoeli, we spoke about this. You're not supposed to project on camera. Anyway, and the notification bell helps the algorithm. That's what all the famous YouTubers say.
Yeah, they do?
That's what they say.
Does it really help the algorithm?
Nobody knows.
What is the algorithm?
I think in order to become famous on YouTube, you just have to start saying that YouTube wants to ban us.
Oh, right.
And
yes.
We have a very controversial concept.
Yes. Join our emailing list, because when YouTube bans us, we will be lost forever.
We have for all of our 46 subscribers, when it hits like 50, I think they're going to ban us. So please subscribe now.
Anyway, what's the next question?
The next question is the suggestion that the government will ban Bitcoin.
Okay, they might. They have. And, by the way, that story I was telling you about trying to get my money from Israel to here, you understand why they do it. Governments hate Bitcoin. Governments have this concept that they own, that you only have the fruits of your labor because of them.
Right, they want to have control on everything, obviously.
As if money and value preceded governments, and governments are there to protect the lives of the people. But
governments are really to serve us.
Right. So they'll tell you that the reason why they're giving us such a hard time is they want to make sure that nobody evaded taxes before sending the money out of the country. And even the taxing system, it should be fair, it should be transparent, but that's another topic. Okay. I have a lot of strong opinions on the progressive tax system. But in any case, what I was saying was about governments. Governments don't like it. There's a myth that NASA created Bitcoin. That's ridiculous. Governments hate Bitcoin.
Well, they're also not nearly efficient enough to do anything.
Governments can't control it. They can't print it. It's the equivalent. Bitcoin at this point is the equivalent, like I said, of water, gold, gravity.
Right. Because it's also
who created gravity?
It's
who
also
owns gravity?
No one government that has it. China has Bitcoin, and
it's truly decentralized.
Exactly.
So if you look historically, whoever banned Bitcoin or banned mining, each time that country, the value went up in that country. Whether it was China, multiple times, and India. Whether it was banning at the different,
it makes you less competitive on an international level.
Automatically, and if you're in a country that has a tyrannical government and they ban something, that becomes more valuable immediately in that country. Right. Not only that, there's an old friend of mine who you became briefly acquainted with at a certain point when you hired him for a brief amount of time. That at one point he was making his whole gig, his hustle, was buying Bitcoin in one place and selling it somewhere else. He was selling it on exchanges where it was at times 30% more. And it was very complex in certain countries in the East where there's no freedom and it traded at a premium. So the short answer is, there's no short answer, but one of the short answers is, if the United States bans Bitcoin, it immediately goes up in value in the United States. Now, the reason why that's not a problem in the long term is because you can store the 12-word phrase in your head, which they called a brain wallet, and go over any border, and you'll be a wealthy man somewhere else.
Right.
And what if they throw me in prison? What do you mean? Why can't I leave the country? I'm an American citizen. I can do what I want. I didn't break any laws.
Correct.
Yeah, but you own Bitcoin. I lost the Bitcoin. Like, so you need to go down such a conspiracy theory of the United States losing all its you lose all your constitutional rights.
Right.
Now, there are many other answers. First of all, the United States government was the largest seller of Bitcoin in the year 2023. And
Until they realize that it's really valuable and they should hold on to it.
yeah. They confiscated. So they put more than 100,000 Bitcoins on the open market. And I'll tell the government, how can you confiscate something? You sold it to me. But they can, meaning they can try. If they end up trying to confiscate Bitcoin one day, they can only go to the main exchanges like Coinbase and Gemini and Kratter.
Which they do have control over.
They eventually can put enough pressure. Now, the reason why it's not likely, there are ETFs that are regulated by the FCC, the strongest and most powerful companies in the world who lobby governments, who really control the governments. I'm not trying to be a conspiracy theorist. We know like how it works. And those are the BlackRocks and Fidelities and Vanguards and Schwabs and all the financial world. They all have their ETFs now. They're all in on Bitcoin now.
Right.
And Matthew Kratter even has a theory that he says, this is my own theory, that some of the boys at what happened to Larry Fink at BlackRock. BlackRock, for those who don't know, is the largest money manager on the planet. They manage, at this point, it's $12.6 trillion. Every time I hear the number, it's always larger. I don't know how it grows daily, but of $1 trillion worth of assets. They own minority or majority shares in like every company, like whatever. Look down at what you're wearing, your shoes, your shirt. They own a stake in that company if it's a publicly traded company, and the insurance that you carry, the car you drive, the umbrella you're carrying, everything. BlackRock has a piece of everything. So they were so against it. Just 3-4 years ago, Larry Fink, the co-founder and the CEO, he called it like the money launderers.
I think they called it the pet rock.
No, that was not him. That was Jamie Dimon from J.P. Morgan. No, he called it the money laundering index. Right. He called it, basically it's used for money launderers, which is another question we're going to get to soon. And then they made such a switch, and now he's calling it, now that he has the largest ETF in the world that holds Bitcoin, and he is becoming...
He's buying more than anyone else.
Right. He's holding now more than Saylor. He's holding more than 220,000 Bitcoin. Just his own ETF alone. And now he's calling it the flight to safety and the greatest thing in the world. So Matthew Kratter from Bitcoin University claims that some of the people some of the bros working at BlackRock started purchasing it, told some of their buddies, everyone started buying it, it started going up. It came to Larry Fink's attention. He's like, okay, I'll jump in on this. I'll put $1 million in this and whatever. Eventually, they saw what's going on, and they're like, let's make an ETF so we can pump our wealth. Because
Of course.
They're actually the only people in the world who can actually pump Bitcoin.
Like, well, from a trend perspective,
isn't that an interesting,
I like that. It's
interesting theory.
Yeah, I like it.
Because his question is, why did they pivot so hard on Bitcoin in the last few years? Like, what changed? So I thought that they had their aha moment and understood it.
What I am curious, though, and I don't want to get into it because it's a little too technical for the newer listeners, but why Grayscale is still selling without changing? Let's say
they're not. They slowed down a lot.
Okay. But they could have changed the policies of the borrowing and the percentage that they charge and stuff like that, remember?
No, but the Grayscale was mainly selling because people were exiting because their fees were too high and they couldn't be competitive.
Why didn't they change the fees as opposed to...
Because it seems like they were not approved to fully convert their trust into an ETF. It's really technical stuff.
Fine.
But it's basically over.
For our listeners, there's been one...
entity.
As all the Fidelity and BlackRock were buying super aggressively Bitcoin every single day, every single business day.
Why was it not pushing the price up?
It did push the price.
Yeah, but why didn't it push it up more?
There's one factor that was pulling it back.
There was one entity that was selling them, had to liquidate. It was selling,
right.
He was the largest.
It was a court order, right?
They were holding more than 1 million coins at one point, and they were just selling and selling and selling daily. Move on to the next question.
Okay, so another myth I'm going to throw at you: Bitcoin has no value because anyone can easily create their own cryptocurrency, also known as a fork.
Okay, first ask what backs Bitcoin, because we can get from one to the next. What is Bitcoin backed by?
What is Bitcoin backed by?
The same thing that backs gold. That was easy.
Okay.
And the same thing that backs the dollar. The only thing is the dollar.
Okay, you could.
The dollar is backed by what they call proof of war, which means it's a play on words of Bitcoin's backed by proof of work.
Yeah.
Which we can explain of how it's created and what keeps the network alive.
Okay.
But the dollar was only able to. The only reason why the United States is such a powerful currency, we're the reserve currency of the world, because they were the strongest military in the world. And they forced the world to use the dollar for buying and selling oil and certain commodities, and it became the reserve currency of the world post-World War II. So
So
so that's proof of war. They were only able to print money. They were only able to start getting off the gold standard temporarily in 1914 to print money for World War I. And then eventually completely get off the gold standard in 1971 under Nixon when they needed money for the Vietnam War. And the only thing that backs the dollar is that it is, first of all, the greatest country in the world is the one that has it. And out of all the crappy currencies, the dollar is the least crappy, by the way, by a long shot.
that's true.
Yeah, yeah. At least for many years, they really only did do like 2 to 3% inflation. Besides, then COVID hit, and
And then Biden's administration.
right. But people didn't notice it. Meaning, the inflation really was more, but things got cheaper. At the same time, efficiency in the marketplace balanced for inflation.
Right.
Right.
Inflation would never have been that issue because of the economic growth and because of the development.
Meaning, people wouldn't have noticed it as much. Meaning, really, if you wouldn't be printing, like we talked about in our first episode, you holding on to $1 for 100 years should have had that dollar spending power go up through the roof to grow with the economy.
Right.
Instead, it kind of just lost a little bit. It's
Right.
slow. So the dollar was the best currency. It still is. And if not for Bitcoin coming around, remember we said the hardest money in the world always wins?
Yeah.
So the dollar always won. And the only reason why the dollar is going to lose now is because a stronger currency came along. And nobody can change that. It's around. You can't say, like, okay, ignore it. That's the equivalent of telling the people in India when the British brought their gold and the Indians and the people in India were trading silver, ignore the gold. They're like, we can't. It's here. And don't forget, the British keep flooding our cities with silver. So the same thing. You can't tell somebody, ignore Bitcoin forever, when the Bitcoiners are all just borrowing fiat money to buy Bitcoin.
Yes.
That's called
shorting dollars.
That's called shorting the dollar, right? In a nutshell, a short sale means, short selling is where you buy something, you borrow something for cheap, and then you sell it, or whatever, you convert it to something, and then later on you buy it for cheaper, and then give it back, and you make the difference. So if, let's say you want to short sale a stock, the stock is currently trading at $40, let's say, so you borrowed, 100 shares from somebody, you sell it for $40, you pocket the 40, you know that this thing's going to crash soon. When it crashes down to 10, let's say, you repurchase those 40 shares. You give back the original shares to the person. You purchase it for $10. So you make $30 per share, and you pay the little bit of interest and fees that the person who lent you the shares. So that's essentially what Bitcoiners do, is that they borrow dollars, knowing that Bitcoin, what am I paying? When, especially a few years ago, it was a no-brainer when you were borrowing at 2.5% interest. But even now, you're paying 7.75 or 8% interest. Bitcoin's going up more than that each year, a lot more.
It goes that up every month.
right now it's monthly. So they're borrowing, they're shorting the fiat currency. Okay. Now, I don't recommend that you do that, by the way. You need a lot.
Not if you're a beginner.
No,
if you don't have
if you don't have strong conviction and spent
you're gonna
dozens, and maybe even hundreds of hours really having this conviction, understanding around the world of what this consensus of Bitcoin is, why it does not need to be backed by anything, because money is a consensus of humans, that we have this agreement, for my good and for your good, for everyone's good, that we want to trade with this gold. And Bitcoin is gold.
Okay, so now you're very good. So now in the context of that...
Right, the next question.
It's the same question. We were talking about forking Bitcoin.
So I said it goes into the next question.
Right.
So what backs Bitcoin? Nothing, it's a consensus. The answer is, if somebody replicates another coin, you need to get the consensus, which today you have... the numbers are hard to figure out because there are, for example, the amount of people that are in big wallets, right? They're big wallets, like, on some major exchanges. Mm-hmm. And some people who have wallets in villages where you have multiple people in the same family joining wallets. It's very hard to know real numbers. But we know the numbers. There's more than 100 million Bitcoin holders at the moment. And if you count the ETFs, it's probably a lot more than that.
Right. Well,
right?
And the ETFs are still buying. There's still,
right.
It's still in a very early adoption phase.
There are 52 million wallets that are holding less than a Bitcoin.
Yeah.
Okay? Now, that's a big consensus out there. Think about how many people are trading. If you take a whole bunch of list of currencies, I think there's like more than 100 currencies that are smaller than Bitcoin in actual amount of people who are holding them. And if you don't count the speculators, just the HODLers, that number's still more than 50 million. And there's like barely 10 million people holding the shekel. Think of the Swiss franc. Think of I know the euro kind of displaced, but there's a lot of the currencies in Europe. But there's a lot of European currencies that are smaller, a lot smaller than Bitcoin, even smaller than the shekel. So that's a pretty big consensus. So you would have to, in order to figure out how Bitcoin will be replaced, you need to go through it step by step. So he's talking about forking. The concept of forking is that what is Bitcoin, right? I don't think we ever explained it properly. Bitcoin is, and where is it stored, right? Where's my Bitcoin? It's like, oh, it's in your wallet? I take out my wallet. I don't see it there. No, it's in my head. Oh, it's on my computer. So I break your computer. Okay, I'm being really silly now. But where is Bitcoin stored? Bitcoin is stored in the same place that your dollars are stored. On a ledger.
On a cloud.
On a ledger.
Yeah.
That's where it's stored. So your Bitcoin is always on the decentralized every hour. If you, let's say, received one Bitcoin in the year 2017, in the month of March, 7 years ago, I'm doing math correctly, and you never sent it anywhere, it's still written on page number, whatever the block number was. It's there. It can never change. The only way it can change is if you access your private keys and sign a transaction, and then you send it, and then the miners and the nodes will verify that this thing never moved, and you're only sending it here, nowhere else, and then they're going to write on today's page, in the next block, today's March, 27th, they're going to write that you just moved a half of that Bitcoin to another wallet. And now your Bitcoin is always stored in the same place, on the ledger, on this notebook. Remember we gave the example if we play Monopoly and we keep introducing a page, right, in the other episode? We talked about, like, we're playing Monopoly, all of us, and we make this agreement. We're going to start keeping track. I lent you money, you borrowed, you keep this notebook.
Yeah.
And then before we turn a page, we fill up the page, and it's a really exciting game. We quickly stop, and everyone looks over theirs, and everyone signs their initials on the sheet.
All right.
That we can.
And
now we're turning a page, and all the balances from this page get updated on the top of the next page, and we continue. So that's what Bitcoin is. Every 10 minutes, the entire ledger gets redistributed. You can never go back more than really one or two, or it's possible to go back up to 6 blocks, but an hour later, it's final settlement.
Okay, so I'm going to throw that at you as well. It's like some people actually, one of the myths is that Bitcoin is inefficient as a method of payment. I have an answer, but...
okay, let's get to that because we really have to explain what you were just saying.
Forking.
No, how can it be replaced? We have to go step by step. So I was explaining what forking means. I was first explaining where your Bitcoin is and how what a fork can mean. What is Bitcoin Cash, BCH, or Bitcoin Satoshi Vision, BSV, right? I had people that wrote to me, no, Bitcoin Cash, that's going to be the real Bitcoin. So even though both of those have been losing value against Bitcoin for the last 5 years, like steadily. They both had a brief moment in the sun because the consensus...
when they were pumped.
The consensus is not following them. Now, so let's talk about what forking means. So we talked about the Bitcoin is always on the blockchain. So when you run the Bitcoin software, it means the Bitcoin software just has the exact software that's able to run all the searches to search that there's no double spend, that everything's accurate, and it has to match up perfectly all the UTXOs, unspent exchange traded outputs. I don't know what the X it's trade outputs. What does the X stand for?
Transaction output.
Yeah, but why is it called U? Oh, yeah, because the X is transaction. Yeah,
X is transaction.
Yeah. What is read it? UTXO.
An unspent transaction output.
Right. So transaction is TX.
Oh,
yeah. I knew it didn't match up with the letters.
Okay.
Yeah, transaction. So UTXOs means like change. When you got your wallet, you got a half a Bitcoin here, a quarter, 0.1. Your wallet doesn't put it all together. Your wallet just tells you that your unspent transaction output is the amount you're balancing your wallet. And when you send, am I going into too much detail here? So when you send, the software needs to verify that they all match. Because if it picks up something, everything gets found and they find your double spend problem. That you just send an extra Satoshi to the wrong person. You don't have this balance in your wallet. But anyways, so if you run that, somebody could take the exact software and make their own Bitcoin and run a brand new network that runs exactly like Bitcoin. And the answer is yes, you can. You can do it as many times as you want. But who is going to be on that chain? You'll be all, how does Matthew Kratter say it? You'll be alone playing donkey basketball. And you're not in the NBA.
You could make yourself Satoshi Nakamoto.
Right.
You could make 1 million more Bitcoins.
Right.
And give them to yourself. But that fits with no other consensus in the world with anyone else. So if you try to use that for the general Bitcoin network, it will get rejected, and you won't. It's just not gonna. Right. It's just not gonna work.
Picture you make my name. I make the $, or you make the Vayner coin, and in your household, yeah. It could work.
You be careful because this channel is going to get really big, and then there's going to be all these meme currencies. later on, the double dollar is going to be the new Bitcoin.
It's like not the doppelganger, it's the $1.
Exactly.
So here comes the question. Maybe another currency will come along, or somebody, some charismatic leader, or somebody will come along for whatever reason and create a better version or a newer version of Bitcoin, which follows the same principles. It could be money and all that, and people will move over there. The likelihood of that happening, you have to think about the step-by-step, how that would happen, how it would play out. I was never able to find a scenario, how it works. If you want to do it as a thought exercise, I'll follow you. I cannot find a way that it's done. The only thing that I could follow is when somebody says, somebody will make something better.
But the onboarding process makes no sense. That's the part that I don't get. Like, how do you get that done?
No, so people's question is, if Bitcoin happened, it can happen again. Meaning, the original Bitcoin started, somebody started it, he was noble, he disappeared, he didn't retain control, he didn't leave himself a backdoor, but somebody else can come along and do that. So the first question is...
How much better would it have to be?
Not just that, why would this person come along and do it?
Okay, so let's
say... That's the first question you always have to ask.
Let's say, I'm gonna, play along here. Let's say that he has these unbelievably altruistic... intentions, and he really wants to make a cryptocurrency that's going to
be better than Bitcoin.
Let's say more efficient, utilize maybe even less energy, if that's an issue, and I don't know, all the issues that.
But
Bitcoin
that is Bitcoin. Bitcoin has all the nodes are constantly upgrading the software and making it better, but they all have to agree.
Right.
So what idea will somebody come up with?
Correct. So it's like, in order for someone to actually do that, they would have to either do it because they want to end up controlling it in the end.
By the way, that's what happened with BSV. They increased the block size to 100 megabytes instead of 1 megabyte. And it was called the block size wars that went on for like 2 years, where the original Bitcoin said, no, we need people to be able to download the entire Bitcoin network on their computer to be only a certain amount of hundreds of gigabytes. Whereas the BSV entire node, if you run it, is like 11 terabytes. It's like not even comparable. So the people disagreed. But all these security updates like multi-sig, which is multi-signature, and Taproot, of how keys are generated, they've upgraded the security of Bitcoin, and it will always get upgraded. If anybody comes up with an idea how Bitcoin can be better as money, again, not flashy lights and sirens and smart contracts or any kind of funny thing, the people will adopt it. For example, the ordinals, they're fighting over that. You know what ordinals are?
Yeah.
Ordinals are what you can inscribe on the Bitcoin chain, and it's becoming a big thing. Now, the miners have no choice because, you can write whatever you want as long as it fits into a block. You can write, Alex was here. No,
you could.
Not really. In cryptographic terms, you can. So people are making this whole kind of like instructions, which you can't.
It's basically an NFT system that's built on Bitcoin, which is
you can say, I want this dollar only to go to, I want this dollar, so to speak, in my bank account, that's what an ordinal is, to go to my great-grandson. And that is an ordinal that you can write on your on the chain. And just like we gave the example of the notebook where we turn a page on the Monopoly game, you can turn back to that page.
You could basically add this into the...
You can verify it and turn back to page number 5 and say, oh, yeah, it says that you have a $1 that you want to give to your grandson. I guess we'll have to wait till your grandson is old enough to receive that dollar, or until you get married and have children, and their children, and then your child gets married and they have children. Then you'll be a grandpa. The point is, like, that's an ordinal. But the Bitcoin people, this also answers the question about what we've discussed, like what if somebody makes a quantum computer that can steal people's private keys? The answer is the Bitcoiners are always they're the best cryptographic hackers in the world. They will upgrade their security that will not allow that breach to happen. So to summarize, nobody will ever move over to a softer money when a harder money exists. So for you to make the case that something will replace Bitcoin, I have not heard a good argument how that happens step by step. So hopefully somebody will ask the right question that we can, for all of our securities, maybe somebody will come up with the right scenario of like some righteous person that will come along and make something better, and the network will not be able to adapt to it. But I can't think of it.
Excellent. Okay, Yoeli, I think at this point it might be a good idea for us to just make sure we covered all the myths that we prepared for us to discuss, and also run through questions from our listeners, 46 of them.
We probably touched, the questions overlap each other, so let's run through the questions that we...
Okay. Bitcoin uses too much energy.
No. Oh, you're starting from the beginning. All right.
Okay. Bitcoin uses too much energy and bad for the environment. We already learned that there's an argument not like that. Bitcoin is a bubble. Bitcoin is a Ponzi scheme or a scam. Bitcoin is just for criminals. Not true.
Oh, we haven't touched upon that yet. If it's just for criminals, that idea was also the data that Matthew Kratter has portrayed. It's that has put down very nicely, well sourced. Somewhere about 1% of all Bitcoin activity is criminals, whereas 99% of criminal activity takes place in the U.S. in dollars, in cash.
Right.
And it doesn't stop us from using cash. I mean,
by criminal, you mean like things like tax evasion, or talking about like money laundering and.
Well, if people are able to get out of paying taxes, they'll do it in any currency.
Right.
And it turns out that it's really hard when you have KYC laws, which means know your customer. It's so trackable. Like
everything's open.
In order for you to buy Bitcoin, you have to give in the United States at least, you have to give your Social Security, a picture of your license. And in New York, you're limited to like one of two apps. And if you send it to a wallet, they know that wallet's associated with you. But you say, oh, let me try to cheat and send that from one wallet to another. And sure enough, it's as transparent as it gets. So it's kind of a very lousy thing if you want to use it to break the law.
Right.
It's a pretty bad idea, actually. So it's not used by criminals. Go on.
Bitcoin has no value because anyone can easily create their own cryptocurrency.
We discussed that.
Bitcoin can be replaced by a competitor.
Okay, we discussed that just now.
Yeah, the forking and okay. So Bitcoin has no intrinsic value because it is not backed by anything. We spoke about gold.
Bitcoin is backed by Bitcoin, just like gold is backed by gold.
Right. Bitcoin is too volatile to be a good store of value. We covered. Bitcoin can be hacked.
We discussed volatility. Hacked, we discussed.
We spoke last episode.
Yeah, last episode we discussed. You can't hack it and go for it.
Okay, this one we haven't discussed so much. I'm going to throw in something here. Bitcoin is not scalable. Bitcoin is not good for payments because the fees are too high.
Okay, this has to be discussed overall.
Okay, fine.
So let's again, gold. Gold was never used as a way for a person to buy a house in another country. He used a banknote. It was backed by gold.
Right.
Banks settled their differences. What's called final settlement was done in gold. A ship would actually sail across the sea with a final settlement for, let's say, 1 year of transaction between France and the United States, or United States and England, or France to England, Germany, whoever was on the gold standard. It was final settlement. Bitcoin is supposed to do exactly that, just much simpler. Now, the best example of what we also discussed a little bit in the last episode of the Lightning Network, that is going to be the technology, or a better technology might emerge in the free marketplace, where you are transacting to buy a cup of coffee, not on the chain. You're not bothering all the nodes and miners to verify your coffee cup for one simple reason. The transaction fee eventually is going to be higher than the cost of your cup of coffee.
And it takes 10 minutes or more.
Right. But just like when you buy a cup of coffee today, you're not using you're not writing them a check, you're using your Visa card because it's worth it for them to use your credit card. It's worth it for everybody. It's not final settlement. They're willing to take the risk of the chargeback, that you're going to dispute the charge for your cup of coffee.
For $4.
Because they know that 98% of people pay, they get paid in full. So the Lightning Network is where you're willing to risk a small risk, and that is transfer a small amount of your Bitcoin off of the chain onto this network, and then it opens up payment channels between anybody connected to the network.
Right. This is already quite well developed as well.
Yeah.
It's been in development for years. But
and the average cost on the Lightning Network today is under 1 penny per transaction.
Which is way less than credit card processing fees.
Way less. Credit card
merchants are suffering from. And
yes, I know.
Again, we're getting back to the banking system being
broken.
Yeah,
I accept credit card payments in all my businesses, and it's between 3 and 4%. Just goes away.
Right.
And the person who paid gets some of it back in the form of points.
Which a lot of them are not used. The whole thing is...
Anyway, the idea is the Lightning Network is a technology that has come out. It's been around since 2017. And it just keeps getting better and better.
By the way, Lightning is only one of them. For reference, for people to know, there's when people talk about Bitcoin, there's 3 levels mostly referred to. There's level 1, level 2, and level 3. And level 1, people say, is the transaction that you would actually perform on the network with a ledger that Yoeli was describing before.
That's known as the base layer. That's like the gold itself. That's like the ship of gold.
Correct.
Actually reaching the vault and its destination and settling the transaction. Once you have the gold, it's settled.
Right.
You can't then go and say, give me my gold back. We just settled it.
Right. My understanding that level 2 is things that are living and connected to plugged into the blockchain, the Bitcoin's level 1.
Like the Lightning
Network, correct.
Lightning Network.
And there's a lot of other technology that's being developed in that field that we're going to see in the future. And level 3 is like Cash App and other, software companies that are plugging into the Bitcoin network. In a lot of cases, you're not able to pull your Bitcoin out of the network through them because they are kind of not just a custodian; they are like the full control in between. But for adoption, I think it's still a very good thing.
Yes, as Bitcoin becomes more adopted, all the creative minds around the world will come up with all kinds of creative solutions for the payment system to keep the small amounts off of the base layer chain.
Correct.
I know you're willing to risk a few $100s to move it into a spendable, like let's say you create this like Bitcoin card where every now and then you recharge, you put $1,000 worth for your month spending from the base layer, which is a one-time, and you pay a $3 fee of moving $1,000.
Yeah, of course.
$1,000.
All of these fees are like a joke in comparison with what we're used to.
Which is less than 1%, correct? And now for the next month, that $1,000, you're willing to have that converted into its use off of the chain, and there will be many, many options in the future, and that's how it's designed to be used.
That's why I think the adoption today is so much more kind of pushed through the people that want to store the value and see the store of value, because in terms of the efficiency of transacting with Bitcoin network itself,
it's not a developed market yet.
But I'm saying like the first layer is not meant to be for coffee.
Right. Today the layer is a person wants to hold Bitcoin. He needs to
just owning money,
and he wants to. Then he wants to spend some of it. He will then go move some of it to an exchange, sell it for dollars, move it to his account. That's how it's used today.
Correct. So we now just addressed the scalability and the aspect of the fees being too high. That this is really not even a temporary problem. We're already kind of getting out of it, and as it's getting more and more adopted, it's really going to be gone completely as an issue. And then another myth.
You're talking about the volatility, but
volatility we didn't get to.
You were talking about scalability. Sorry,
scalability.
Got it. Volatility we discussed in great detail.
Yeah, we'll cover that.
There will be a lot of volatility in the next decade. Yes, not always the same, but there will be some real bumps. You could just imagine how the speculators are going to dump Bitcoin when after the halving it flies to $150,000.
Right.
And which, by the way, what happens is suddenly all these newbies get involved,
and then they get scared of what?
And then they buy the top, and then it drops down to 90,000. So they bought it at 150. It drops to 90.
They sell it,
and then they sell it in a panic, and they spend the next 4 years cursing Bitcoin. And during that time, it goes back up and makes
400,000
and makes new highs. That has been the cycle of Bitcoin all the time. Now, the reason why it's hard to don't forget, these are people that heard about crypto, and people bought Doge at 1 penny and they sold, and it's a jungle out there.
Right.
So the volatility will not go away anytime in the near future.
Okay, it's probably going to go down. It will go down.
Yes, but it's just not going away. And if you dollar cost average, you will always win. If you look at the past in Bitcoin, you always win.
Very good. Okay, so next myth is Bitcoin max supply of 21 million coins will eventually be increased. That one's very similar to me as the hacking argument, or
right?
Like when people say that someone could hack into it. There's no
think
way,
of the incentive.
Correct. There are no. Excuse me.
You have to ask who would agree.
Correct. There's no incentives for people to do this, because anyone who would have the power to do it maybe would literally lose out on enormous amount of money in their entire business model and shoot themselves in the foot or head and basically break the whole thing that's feeding them.
So, but then the follow-up question you're going to get for that, I guess I'll ask it to you.
Please do.
But we see with the dollar that they're always printing it. What makes the dollar different than Bitcoin? That Bitcoin, nobody will ever decide to change the code.
Because there's no incentive. The government has an incentive to print more dollars, so they could channel it to things that they want.
So that one in our last
episode. And they could win next election and next election.
In the last episode, we discussed the difference between dollar and Bitcoin, and that is the dollar is only a few people who can print it.
Right.
And Bitcoin, everyone has to agree to change a rule. So if they would have asked the entire United States to vote in 1971 if we should go off the gold standard, do you think we would have done it? I mean, maybe if they convinced us, if they really lied to us about the benefits.
Yeah.
We would have. At this point,
I understand.
Who would have an incentive to devalue their currency by making more than 21? Who? Nobody. You can't even think of that person. Only an outsider who wishes he can buy Bitcoin for cheaper. He has no power to do that. The only one who has power to do that is the entire network. 51. It's called the 51 attack. 51% of the nodes.
Which you can't get a consensus because everyone's different.
It took them 2 years to upgrade the security to make it better. And you think you're going to get even one Bitcoiner to say, like, let's increase the supply? The whole point of Bitcoin is that it's scarce. There will only ever be 21 million. It's all written in time, starting from 2009 to 2139. And it runs in time and gets halved every 4 years. And every 10 minutes is a block. It's like it's fixed. And you keep finding more Bitcoin throughout time. You can't rush time. You can't find the Bitcoins that are supposed to be mined in 2040 now in 2024. You have to wait 16 years.
Okay, very good. So one more myth that we have to take a look at here is Bitcoin was designed by the U.S. government or some other government to enslave people.
We discussed that already.
Okay, very good.
It is not.
Okay, I've actually written a few more here.
Questions from listeners?
Yeah. There's one more we didn't address, and that it's kind of far-fetched, but I think some people that really want to go there might be curious, is there are certain types of, I forget what it's called, but it's like an atomic weapon that could be exploded up in the atmosphere that would not kill anyone directly, but would fry everyone's electronics. Do you remember what it's called?
EMP, electromagnetic pulse bomb.
Okay, so that is a real possibility, and people are concerned that if something like this happens, it would definitely fry a lot of internet servers and a lot of machinery in the world. A lot of cars would not.
Okay, so for that one, to answer that one, type in Bitcoin University EMP attack. And you will get a very clear video how it does not affect anything. Meaning,
right. If that was basically the answer is that first of all, it would have, in order for it to not to just affect it, you would have to
get
even target every single
city in the world.
Right.
Every single region in the world.
By then, we would have a much bigger problem.
Have a much bigger problem. And even if it did, even if somebody found a way to do that, as soon as infrastructure is rebuilt and one internet connection is running, and you have one laptop computer running, just one, the network is back up, and we pick up from the last page where you were.
That miner would make a lot of money, by the way. Okay, I'm going to just mention one cryptocurrency here that is not a Bitcoin.
Okay.
And Yoeli's feeling already suspicious. I'm going to describe to you, now that from everything that you learned, I'm going to describe to you something that, a few facts about it, and you tell me what you think.
Which coin it is?
Try to guess, but first let me just read it out.
Okay.
Okay? These coins are getting really crazy. 27 trillion in circulation, unlimited supply cap, only one node, which means like only one
computer, only one computer running it.
Yeah. 25% of supply is minted in the last 6 months, and 1% of holders own 30% of the entire network. Can anyone guess which cryptocurrency this is?
Sounds like a really bad cryptocurrency.
The answer is it's the US dollar.
Oh, all right. Now read it over.
Okay, 27 trillion in circulation, unlimited supply cap, again, because they keep printing. One node means like one party gets to decide.
Federal Reserve.
Exactly. 25% of supply minted in the last 6 months, which is absolutely insane.
Right, this must have been written during COVID. Okay, go on.
Well, because it's been way more.
No, I'm saying no, since in the last 6 months, not 25%.
Okay, fine. But in the last few years of its entire history.
Yes.
And 1% of holders own 30%.
Okay, that makes sense.
Pretty crazy. Okay, now let's get to the questions. I'm going to pull up here. We have from Nadav Julius. In future episodes, I would love a breakdown of the best ways to buy, store, and transact with Bitcoin. There are many types of wallets. Which one is right? Buy Bitcoin, as well as confusing. Should I buy on Coinbase, Binance, somewhere else? I think this has really just short answer, and that is the fact that if you're if you're only limited to Coinbase in the U.S.
New York, not U.S.
Within the U.S., I'm saying it's only New York.
It's only 48 states give you like multiple options.
Okay, so if
Coinbase at this point is the most prestigious because they're holding on to the coins for BlackRock and Vanguard and Fidelity and ARK, holding on to everybody's coins.
Sure. So not to say that if you're serious about Bitcoin, it's definitely much better to hold it not on with a custodian, but hold your own, because again, just like a banking system could freeze your account, so could Coinbase if something happens, if the government sends them an order. Again,
it's not happening soon.
But get in the habit of owning your own Bitcoin. Learn. It's better that you mess up your wallet with $100 worth of Bitcoin then you don't know how to use it, and then you want to move it, and the amounts are different at that
You
point.
want sooner than later to order something called a Blockstream Jade, which is the simplest for beginners. It costs around $60. Some say do not buy it on Amazon because it could be hacked. And the point is, go online and get yourself a Blockstream Jade. It gives you clear directions how to generate a private key, how to write down the 12 or 24 words. You'll understand the security. People have different tricks. If they write them all down or you write them most, you memorize some or you write some of them wrong. Everyone can come up with their way how to save the keys. Now, the way this device works, it's called a cold wallet. It never connects to the internet. All it's doing is it's generating your keys that only you, remember what we said, your Bitcoin's not on this little device. Your Bitcoin's written on the main ledger in the network around the world. But this device is a shortcut that makes you a master key to your wallet. And nobody can hack it and nobody can guess it. Now, you could do it in the form of picking a 4 to 8 digit PIN code, but that is for this physical device that you can plug it in to your phone or to a computer and send Bitcoin.
But that device is, if it's broken, as long as you still have access to your 12 or 24 words.
Or it gets lost, it gets burnt in a fire, or whatever happens, it gets compromised, it has you generate what they call your seed phrase, which is the cryptographic 256-bit, which is flipping a coin 256 times in binaries, ones and zeros, generates 24 words. Or if you want to do 128, then it's only 12 words. And if you can, the real Bitcoiners, they'll make a song out of it and just repeat it for 2 days straight and never have to write it down. People are engraving it, tattooing one over here and one over there. Well,
it could get really crazy.
You can get really crazy with it.
It could get really crazy.
Just this.
Save it in a safe space.
Use common sense. Where to write it down.
But
where to store it.
One very important point that I keep hearing about and emphasized again and again, because of how valuable Bitcoin is, there are a lot of scammers, and there's a lot of software that are like just whatever they get access, malware get to your computer.
Right.
They will be looking for a combination of 12 to 24 words, even in the picture.
Never
form.
have it touch the internet. Never take a picture
ever
of
write
it.
it down in the internet. Don't email it to yourself.
Don't even take a picture of it in your phone that ever connects to the internet. Just keep it pen and paper. Hide half of it in one underwear drawer. Give another half of it to your brother who lives out of state. You can make a few copies of the same one. Disperse it according to your level of safety.
Don't say it out loud anywhere.
Again, you're never going to need it. You're never going to need it unless you lose that little key that you're holding, because that key on its own with your PIN could do all the work for you. This just is like it's the equivalent of a map to your treasure.
Correct.
It's keys. It's a copy of keys.
By the way, this is a little bit of a crazy concept to us, because today,
By the way, I literally have to cut that word literally out of my vernacular. Okay, go on.
Okay, so I think what's in terms of the Bitcoin adoption, one of the things people are challenged with this cold storage. It's a little scary at the beginning, because we're so used to the fact that, like, if I'm an honest person and I don't break law, I pay my taxes, I go to Chase, they take down my information. If, like, I get a fraudulent transaction, I feel very safe about the fact that they're going to take care of it. Obviously, that is the case for most people, I would say. Even though there's a lot of headache that we described here, this is a peace of mind that the masses have adapted to, and they're used to.
Banks have insurance.
Correct, and they also don't. They don't mind, because something like this happens. They just report it in their own end and give people the money. But meanwhile, this is new to people that are going to have cold storage, because they have to realize that they are actually holding on to their own key, and they get to decide what to do with it. So just like with the benefits of having your own cold storage comes the responsibility of making a wise decision of where it's stored, not to make a dumb mistake like taking a picture somewhere and storing it online. As long as you follow these few simple rules that we just outlined about, storing it in a safe place, and not giving anyone access, not taking a picture, and relying only on your cold storage like Blockstream Jade or Cold Card, or there's a few others, then this is your access. It's not touching internet. You're going to be safe. There's no logical way that this could be broken in any way.
Right. Michael Saylor makes the case of why Bitcoin is so much more ethical and humane and moral than gold.
Michael Saylor is one of the largest Bitcoin
is the CEO,
holders.
the former CEO and founder of MicroStrategy.
The most bullish Bitcoin man in the world.
The biggest Bitcoin bull on the planet. So he makes the case. He has a lot of stuff. There's a lot of. You can listen to him for hours. He's a bit extreme of how bullish he is on Bitcoin. That's why he put his money where his mouth is. He spent hundreds of millions. I mean, at this point, his holdings he's holding more than 200,000 Bitcoin.
In the next 10 years, he could easily be by far richest man in the world, way richer than anyone else we know today.
Right. Well, it's a publicly traded company, so he only owns a certain percent of MicroStrategy. But he has a lot. But his company is
gonna be up there between Apple and Amazon, maybe higher.
Right. Who knows? So he explains the concept of in the past, somebody put a gun to your head and wanted to steal your gold. He was able to shoot you and then plunder and take the gold. And when armies conquered each other, they always took the gold. Whereas in Bitcoin, they put a gun to your head. You say, I can't think. I can't remember the keys. Wait, let me try. He has no incentive to shoot you. And it's less incentivizes violence when things are stored in people's brains and not stored in vaults. Interesting concept.
Very interesting. It's very hard to apply it to anything else because it's like nothing else like it.
Right.
But in terms of just human psyche and how people operate,
it's a digital world we're living in today. The internet, most people's interactions, they run their business. All my businesses have always run digitally.
Right.
All my pictures and videos I send out every day to be able to track.
Sure.
How much manpower I need at each job. It's all done digitally. Could you imagine the same business I run where I'd have to send people to 20, 30 different addresses every day to start, describing what they see? In any case.
Okay, very good. Next question. Nadav actually wrote a few, so they're all very valuable. At a couple of points, you mentioned reading materials on various topics. Would love links to specific material. We're going to include that in the description.
In the description.
I would say that Matthew Kratter is a great resource.
The Bitcoin Standard is a must-read.
Okay, so we'll link all of those in the description.
It was written back in 2018 by Safety and Amuz. That's 6 years ago.
Mm-hmm.
And he really goes to the history of money. If you want to be a little bit more edgy and really become a true Bitcoin bull, you can read his next book called The Fiat Standard. But that really just trashes, what happened, the full century of war. He takes it a little far. He blames everything. He claims all of it, 1914 and the World War I, the Holocaust, World War II. Everything that went on in the past century was only due to the dominance of the people who had the money printers.
Very good.
Because you couldn't print gold, and that's why we never had such a bloody century like the 20th century. He directly links it to war, and that's why others make that joke. Instead of proof of work, which is Bitcoin, they call it proof of war, which is the dollar.
Okay, Nadav, thank you so much for your questions. You also said that you really appreciate the schmooze vibe of the podcast.
Yeah, we didn't schmooze much today. Your monkey story was pretty cool.
Yeah. I heard it from you though. Topics were jumped around a little bit. We kind of did this as well.
Yeah, I was much less interruptive this time. I think so. We'll find out when we
You know what, you guys,
playback.
you tell us. Please subscribe. We're trying to improve, and we're going to keep improving because I know who I am and I know who Yoeli is. This podcast is going to be amazing.
Yeah.
Meanwhile,
if good guests agree to come on this show, if not, we're just going to be.
It depends if we keep up the schmooze vibe.
We have a few good topics to talk about before we bring on guests, but we'll see.
Okay, so Ruben Kirsch here, an old friend of mine from California, mentions that the fluctuations and the volatility, we really addressed that for the most part.
Right.
One of the comments that he made was that I hadn't pushed back on the points that you, Yoeli, were making. And for all of our listeners, just to say, I'm pretty much on the same boat. If something doesn't make sense, I'm going to address it. Obviously, Yoeli.
Oh, he asked you why didn't you
push back to you?
Push back to me. Yeah. We will argue a lot about things we disagree on. It's just that we both kind of have been exploring Bitcoin for a while, and we kind of agree. We're all in on it. Everyone can understand. Everyone could take the word "all in" in his own way, but all in, at least ideologically, that we should be putting consistently a tiny amount of our net worth in Bitcoin, hoping that it will act as a good insurance policy and protect against all the craziness that has been going on with the money printing.
I would try to, just for myself, the way I think of it in the podcast itself is if I was to break it down into stages of, let's say, impact that I would want to make on people listening, about Bitcoin and our conversation about it, I think that there's pretty much a range. And everyone has different circumstances. Some people have money, some people don't have much. In the end of the day, if you did enough research and you gained the clarity that this is the future and this was going to happen, right? and you would rather your friends and family be on board, or people you care about, or people that care about you, you would want to tell them and say, look, guys, I this is where it's going. Like, after all the content that I consume about where Bitcoin prices are going in the next few years and even the next few months, you want to tell people and say, look, it doesn't mean this is not a pump and dump thing, but if you're going to be investing money, it's definitely good to start setting aside and putting it in Bitcoin. If you have more money to invest and you have the clarity, in other words, you did the research and you're not going to sell every time it fluctuates down and get scared because it's like, oh, I'm going to lose money on this. When you have that level of confidence, you could put in more. If you don't have that yet, no rush. Take your time.
Stick to the plan.
Exactly. Stick to the plan.
You came up with the $10 a week, put in the $10 a week. You upped it to $30 a week, put in the $30 a week. Exactly. That's what I did in May of 2022. I went to every single family member on both sides, mine and my wife's, and all my siblings, first cousins. And I had some I did in groups and some I did individually. And I begged them and I said, how about this? I'll sign a contract with you all that I will guarantee your investment, which means in July of 2025, if you're not happy with it, like, I couldn't find a way to explain it to them. I said, just trust me on this one. I will keep money liquid in a stock.
Did anyone from all the people this
portfolio.
happened with? Did anyone numbers wise, it wouldn't make sense that they would come back.
Most did not do it. The few that did are doing quite well. Meaning it's a good investment for them.
Sure.
And I know that somebody could always say, so far. And I said, listen, they have until July 2025.
Peter Schiff.
They have until July 2025. I said, I want this thing to be, I made a promise to stay liquid, to be able to cover it if something, again, I don't know, people say, could something go wrong? I say, of course, I don't know the future. I don't know what kind of circumstances. Nobody saw COVID coming, for example.
Right.
The argument that I make is I don't see a path based on the history that I know and the understanding of human psychology and the history of money. I do not see a path how Bitcoin does not eat the world over the next 2 decades.
Sure.
Like, completely over.
And
now, does that mean it won't? No, because just because I'm not creative enough to come up with the unknown.
Yeah.
I have no way of, I can't answer something that I can't understand.
The pattern has been that anytime Bitcoin gets attacked, either by a government or they come up with a policy against miners,
it just gets stronger.
It just gets stronger. It's like one of those, I forget the creature that they have in the Greek mythology.
Greek mythology, yeah.
Where you chop off one head and two grow.
It grows 2 heads.
Exactly.
Yeah.
So
yeah, Bitcoin has been that beast. So
I'll just bring in a quick stat here. Someone sent me this picture. It says, for those that are not going to be seeing, I'm going to put it in the video, but it says 2016. It's talking about the prices of a home in the U.S. dollars versus Bitcoin. So 2016, an average home in the U.S. cost $288,000, which was at the time 664 Bitcoins.
Right.
Then 4 years later, in 2020, the average home in the U.S. is $328,000, which is, by the way, a very big jump as well.
Okay.
Which at the time was not 664 Bitcoins, it was 45 Bitcoins.
Right, because Bitcoin, went up in price.
Here we are, 2024, average home price is $434,000.
I wonder how that happened. Did that house become better over the last 8 years?
Yeah, it almost doubled, by the way.
280 to
434.
Yeah, okay, that's a
1.7.
Yeah, right.
Or something.
The house must have become become gold-plated or something, right?
Right, And the value in Bitcoin.
By the way, for those who don't get it, I'm saying they kept printing dollars, so they drains and not stored and stayed the same. But go on.
Yes, and the Bitcoin value of that is 6.6 Bitcoins.
6.6 Bitcoins. That's
right.
amazing.
So I'm not making predictions here.
Right.
But something tells me that another 4 years from now, it's really going to more than double.
A house will be 600,000.
By the way, if you really follow the pattern, exactly, the house is going to be like
600,000. 2 Bitcoin.
More than By the way, pretty realistic.
Yeah,
prediction.
pretty realistic. 600,000. It's going up constantly, and 2 Bitcoin, maybe 2.5.
Well,
for a minute, it's volatile.
Exactly. It depends.
3 days later, it will be 3 Bitcoin. But the day before, it was 1 Bitcoin.
By the way, that would mean that in 4 years from now, it would be 300,000. Which is, by the way, a very, very conservative prediction.
100%.
4 years.
100%.
I mean, there are people that are talking about 150 this summer.
Right.
And this bull run, which is.
And for those who are worried that buying Bitcoin at 70,000 is like, oh, I'm so late to the game. If you think it's going just 4 years to 300,000 and over 10, 20 years to $1 million and then beyond. Is there really such a difference if you bought it at 20 or 70? And the other thing, like we mentioned last time, Bitcoin is not $70,000. It's 700ths of a penny per Satoshi. When Bitcoin reaches $100,000, it will be a tenth of a penny per Satoshi. When Bitcoin reaches $10 million, it's 10 cents per Satoshi. When it reaches $100 million, it's finally 1 penny per Satoshi. Or a dollar.
We're not doing math on the go here. We're just throwing numbers at you that are pretty...
It's very easy. There's 100 million Satoshis in a Bitcoin, so it's easy. And when you do the dollar amount, you just have to add 2 zeros for pennies. So it's pretty simple math. My calculator never lets me go that far.
Very good. I think we covered extensively a lot. I would invite our listeners to also, besides subscribing, so we get more than 46 subscribers, to also please leave more comments.
And of any topic you want us to cover. Alex and I have explored many different diets. We've explored many different thought exercises.
Life hacks.
Yeah.
Even though I don't like the term.
I know like overcoming ADHD in today's world is something that's much more relevant to more people than it used to be because of people's attention spans with the smartphones and all that. To me, relationships, connection, parenting. We have a lot of topics that we'd love to discuss, and we just want to see like where the interest takes us, the good guests that we find in an area. I saw on your list you wrote down like different business.
AI, big media, big government, entrepreneurship, e-commerce.
So Alex, for example, is very good at using AI. He's a marketer, so that's what he does. And there's e-commerce. There's so many great guests who have done well that can at least talk about what the opportunities that are still out there for somebody to get into e-commerce, or like how much of the e-commerce market is tapped or untapped. I can just imagine that there are a lot of meaningful topics that could be explored, and hopefully we'll bring in the people for the correct guest that can inform both of us, and hopefully we'll be sitting there most of these episodes listening and asking questions rather than me talking.
Okay, guys, how about this? Yoeli, we're going to make this point even stronger. I'm going to throw up a bunch of stuff.
Okay.
Bitcoin, we pretty much covered everything.
Slow.
Okay. Dopamine. No, it's going to be fast because I don't want them to overthink it. Benefits of hot and cold exposure. Diet, quote unquote, and fasting. Personal growth. Torah learning, which is something that's very dear to our hearts, and as we are part of the Jewish community. Myths about Jewish community. Graphology, hypnosis, business, entrepreneurship, e-commerce, AI, big media, and big government. All kinds of exciting topics.
What about vaccines?
I'm adding it to the list. By the way, I actually do want to do more research on that because COVID did something, not just me, I think to all of society, which is woke them up to the reality of how COVID was handled. And now I think there's a lot of vaccine denying, quote unquote, that happened as a result of all of this, all of the nonsense that went down and all the mistakes that they made. So I actually, personally, I'm just going to speak honestly, I have very mixed positions on the vaccines.
Okay.
So I'm curious to learn more about it, and hopefully we'll get good guests.
Hopefully we'll get 2 experts, one pro and one against, and let them have it out.
Right. I have a lot of questions myself. So
you mentioned diet. I would make an entire episode on carbohydrates. See, by the way, that connects to Bitcoin as well. Bitcoin connects to a lot of things.
Let's hear.
Because they printed money for a full century, and things were becoming expensive because they were printing. There was such a surplus of corn. The scientists lied to us. They took a pyramid, which is how you're supposed to have food.
That's the 70s, I think, or when was this?
And they flipped it on its head. So you're supposed to have many servings of grain, right? You get to the top, poultry, a little bit of beef, right? A little bit more chicken, lots of fruits, vegetables.
A lot of starches and a lot of the.
At the bottom, you have all the grains.
Of course.
When my life has changed forever for the better, when I flipped it on its head and cut, besides for Saturdays, Shabbat, I cut carbohydrates out of my life for good, and I lost 30 pounds without even trying. I
did also with trying.
I sleep better. Yeah, you look great, by the way. I sleep better. Incredible. The main reason why I did that was because I was experimenting with energy levels, and whenever I ate carbohydrates, I got sleepy. That's why on Saturdays, I can't keep my eyes open after the meals. I just can't.
Sure. I've learned a lot about this in the last 4 months.
I'm just trying to connect this to look at how the lies when it came to cholesterol levels. No, by most metrics, beef diet is so healthy for you. All the zinc, vitamin D, vitamin C, magnesium, calcium, iron. It's all there in a healthy kosher steak, which has not been modified with hormonal shots.
Now we're really going to get banned, Yoeli.
All right. Thank you.
Okay, everyone, thank you for listening.
until
Please do
next time.
subscribe and leave us comments.
Alex is flying the country. That's why we're shooting this, not on a Sunday. We're going to try to churn out 3 episodes a month, which is 3 Sundays out of 4. We always have to take into account one won't work out. Alex is flying for a week to the Holy Land, and last week was the holiday of Purim, so we missed a Sunday, but we'll figure it out.
Okay, guys, stay tuned for more. Thank you very much.
Thank you.